All right. Good morning, everybody. Thank you for joining us today for the first in a series of panel discussions we have planned for our new Spark Group initiative. My name is Brad Latchett. I am the Director of Government and Industry Affairs and General Counsel for PIA New York. Very happy to be here and to be joined by an esteemed group of panelists who I'll introduce in just a minute. So as I mentioned, this is the first of our Spark Group discussions. Spark Group is an initiative that PI New York has created, specialized communities that allow PI members the opportunity to engage in discussions around the industry, access educational information geared toward your specific role at the agency or specific issue that you might be dealing with, and then get the first opportunity to give input to PIA on various legislative and business issues that are impacting your agency, your business workflow, and livelihood. Basically, let us know what you need. How can we help you? As mentioned, this is the kickoff event here for Spark Group, the first in a series of virtual panel discussions. Today's discussion is going to center on the state of the insurance marketplace today in New York, and where we are right now, and then where we're going in 2026 and beyond. With that, I'm just going to introduce our panelists real quick. And I should mention before I introduce panelists, this is meant to be interactive. If you guys have questions, please put them into the chat. We would love to answer your questions as opposed to what we think you want to hear about. So as we go through, I'll be asking some audience prompts and love you guys to weigh in. But please don't be shy. If you have something that comes up, please put it in the chat and we'll make sure that our panelists get to it. So with that, let me introduce our panelists and we'll get rolling. We have first Jason Bartow with us. He is a Commercial Lines Executive Vice President at Bartow Insurance and Jeb Brokerage. Jay is a third-generation agency principal. Excellent job, Jay. Manages the agency's day-to-day operations and oversees the agency's commercial lines and surety portfolio, specializing in middle market and national accounts. Those of you who have been around PA certainly know Jay. Jay has been a enthusiastic volunteer for the association for a while. He started off as a member of the Young Insurance Professionals, worked his way through the ranks there, serving as the organization's president, in 2016, 2017, or through 2018. And now has moved through the ranks in PIA itself and has served as the association's president this year. So we're thrilled to have Jay here. Jay is incredibly enthusiastic and just a great voice for the industry and the independent agent.
Thank you. Good morning, everybody.
Peter Buccina here with us as well. He's Vice President and New York Regional Leader at Access Brokers. Peter has more than 26 years of insurance experience and has been instrumental in advancing Access Brokers' Northeast operations since joining the firm in 2017. As Vice President, he oversees state strategies to drive growth through organic sales and collaborations with key retail partners. Peter is also a valuable contributor to PINY, currently serving on the board of directors and in multiple committees, and was honored as the 2022 Professional Agent of the Year. So thank you, Peter. We also have Jamie Ferris with us, President of PW Wood & Son. Jamie leads an independent insurance agent brokerage, providing solutions for real risks faced by families and businesses in Central New York and beyond. He manages the agency while overseeing clients' insurance and risk management needs. Jamie is a second-generation agent, so Jay's got you beat by one generation. That's all right. We're not holding at you, Jamie. He's been in the industry since 1987 and holds multiple credentials that demonstrate not only his expertise, but his professionalism as well. And like the rest of our panelists, he's also a valuable contributor to PINY, serving as president and now past president of the association, and currently serving on the Agency Advocacy Coalition, the PINY's Political Action Committee, as well as the Government Affairs Committee, and PI Management Services. So thank you very much, Jamie.
Good morning.
And last but certainly not least, we have Fred Hollander, who is Director of Administration at Lawley Insurance. In that role, Fred oversees a wide range of responsibilities, including leases, facility management, compliance with licensing and regulatory issues, which I have a soft spot for, editing and writing key communications, maintaining accounts, responding to large accounts, and things like that. Fred has more than 51 years of experience in the agency business, which I had to check that because, Fred, that can't be right. I mean, you must have started when you were 3. Brings a wealth of knowledge and expertise to the table. He's also president of the New York Niagara Business Ethics Association and has been recognizing companies in Western New York region for more than 20 years. further underscores, Fred's commitment to the industry and to ethical business practices. And I think most important, Fred is a graduate of Amherst Central High School, which is always nice to have an Amherst Tiger on the call, right? Right, Fred? Go Tigers. As an Amherst grad myself, we need to have at least one. So with that, we're going to get into the discussion, start a little bit with where we are right now, and then go to where I think we might be going. So with that, my first audience prompt, and I ask all of you guys sitting at home here or in your offices or wherever you might be, what is the biggest challenge facing your agency going into, I guess, your agency or the industry itself going into 2026? What are the things that are kind of keeping you up at night and, causing you to lose a little bit of sleep? Throw those in the chat. We're checking in on those. But I'm going to throw that question to our panelists. And I'll start with Jay, since you are the president. That is your prerogative. Jay, I guess, what is your biggest headache right now going into 2026? What's keeping you up at night?
So I would say the biggest thing that I see as a challenge for our agency in 2026 really is the fact that the market is haywire. And what I mean by that is, on the property side, it appears to be stabilizing, if not showing signs of softening. While the liability side, the casualty side, seems to be ever hardening. It's that unique dynamic, right, where the market is not all in alignment with itself, where insurance as a whole is going one way or another. A couple of years ago, it was the excess, like the depression lines, right, where D&O and cyber was softening, right, and so it's the unique challenge of trying to keep up with what the market space is doing at any given moment, and obviously the liability side being as complicated as it is, which also extends to the umbrella markets as well. You're seeing carriers exit the market space. You're seeing a reliance more on E&S markets and non-admitted markets, which of course on the liability side do carry a significant burden for companies that go insolvent and are not protected by the guarantee fund. Unlike on the property side, where you're not going to have a fire and report it 5 years later, you do run that risk on the liability side. So that to me is really the biggest challenge, is the fact that the market seems to be just absolutely crazy, where some spots seem to be, where everybody's jumping on board and rates are lowering, and then some lines seem to be almost impossible to write.
Throw over to Fred. Go to the other side from Buffalo.
We are a large agency. We have 19 physical locations in 4 states, and we have people remote in probably over 30 states. So our biggest challenge is finding talented people who are willing to learn the industry and invest in themselves to become better participants in the process. And we have it on the call. Shannon Van Dorn runs our learning and development department. And Shannon, I don't want to put you on the spot, but if you have any comments you want to make on what you're doing in this role, I think it would be helpful to the group.
Sure. Thank you, Fred. Good morning, everyone. I think a big part of why Lolly brought me in last year was to help map out career trajectories for our young professionals within the footprint. We have a unique situation where we have the youngest and oldest workforce all working together at the same time. So there's a really strong need for a transfer of knowledge. So a lot of what I focus on is helping to connect people with opportunities. I run a mentorship program, an intern program. I champion earning designations and certifications and partner with people like the PIA to be able to offer those opportunities for our people. So that's a big part of how I'm spending my time and trying to ensure that we're prepared for the next stage of growth. And as the industry changes, that we have critical thinking professionals that are able to meet the needs of our clients.
Thank you, Shannon. I can tell you, when I talk to agents, and I've been with PIA for close to 15 years now, and almost without fail, when I ask about the biggest issues, I can almost write in pen, perpetuation and finding, individuals to come into the agency is almost always at the top of the list and has been a constant challenge. So anything that we can do, I think, as an industry to help encourage individuals to come into the industry, and it's a good industry, right? I think we can all attest. is fantastic. So I love what you guys are doing at Lolly. Jamie, give us a Central New York perspective.
Thanks, Brad. Good morning, everybody. I think I'm going to echo a little bit of what Jason said, specifically around the market volatility and where we are seeing apparently openness and softening. Also starting to see that somewhat on the personal line side. We're starting to see the tap slowly open, at least in Central New York. As far as availability of markets, carriers are jumping back in. Rates are seeming to stabilize there. On the commercial line side, I think it's exactly the way Jason laid it out. We're starting to see openness on property. I think BOP is getting the BOP market, at least where we are, starting to open up a little more. So that's more of the package side. But the commercial general liability seems to be an issue still, understandably, especially umbrella. But I think part of the big problem with that is going back even to this talent discussion, that problem has permeated into the carriers. Our challenge is there is a lack of experience on the carrier side. I think from the underwriting side of it, where you can't really talk to an underwriter and have an underwriter understand, okay, can we talk about this risk from a liability perspective? Can you individualize your perspective on this risk as opposed to this global perspective they have against liability? That seems to be a very big challenge, is finding somebody at the carrier side to talk to about an account. It works well, I think, on our smaller regional carriers and the co-ops in New York. I think we're actually lucky in New York State to have the strong small co-op market base that we have here for the regional carriers like that. But as far as the large markets, it's you to get an underwriter on the telephone and talk about a smaller risk. I think there's underwriters there for what they consider middle market. Some of your larger markets, you have that where, okay, now we can talk about it. But a smaller risk that needs a little discussion, it's harder and harder to find talent at the carrier side to have those discussions from an underwriting standpoint.
Jamie, that's a great point that you're just making about the talent gap on the carrier side. And one of the things that I think is dismaying to me as a retailer who again, third generation. So I've grown up knowing underwriters my entire life is sometimes you get these young, talented people and the carriers stick them in service centers. So they're never going to get the career path that they're going to need to eventually become the underwriters. And we are going to have that retirement cliff is coming. It's a lot closer than a lot of us realize when it comes to the people we work with and the relationships we have with our current underwriters. So that's a great point, Jamie. That's sitting out there as a major, major issue that I don't think is really being addressed by on the carrier side.
Thanks, Jay. And last but not least, Peter, and I guess I'm particularly excited to have Peter on here because in the E&S space, I think it's such an interesting space and really does it tells you a lot about what's going on in the rest of the marketplace. So I'd be really curious to get your take, Peter, and what you're seeing right now and what's kind of the things that are making you scratch your head a little bit.
Yeah, absolutely. Good afternoon or good morning. My name is Peter Buccina, so I'm the New York regional leader with Excess Brokers. When it comes to the E&S wholesale spot, it's a whipsaw. And being non-filed rate and form, we have the ability to adapt very quickly and instantly to the overall market. And we're certainly seeing the softening overall being led primarily in the property space. To some of Jamie's points, having a close partnership in the E&S space, somebody that you can pick up the phone and reach out to and have a conversation, really to be on the forefront of what is occurring in the marketplace is ever more important. And there are certainly a lot of folks in the space in New York. We are fortunate. It is in New York to have such large entities and small privately held ones also that are all available to provide that navigation through this changing market. Specific to the changing market, to some of the points that Jason was mentioning, yes, things have not changed in certain areas. Everybody, of course, knows New York construction. Brad might touch on some of the things that the state is, that PIA is pushing and looking into potentially for some changes in that when it comes to labor law. But casualty in New York is stabilized. I would say, looking forward into the year of 26, we see some new markets and some new carriers coming into this space. Some new products are coming in, and programs are certainly coming in. Whereas there was some traditional real hardening in this in 2025. So overall, having a close relationship with your wholesale partners is absolutely paramount. As this space in the market has ever grown larger, we're nearing almost 20% of a typical retailer's book in the commercial space falling into the E&S space. I would say having that ability to pick up the phone and call someone is what's going to assist you and keep you able to navigate through these tumultuous waters. Thank you.
Thanks, Peter. I'd love to piggyback on Peter's point and the one that Jamie brought up in terms of dealing with age carriers, it being tougher, because we've already got a couple of comments of kind of reinforcing that. So I guess what strategies do you guys have for dealing with that issue? I realize sometimes it's insurmountable. And Jamie, you mentioned dealing with your smaller carriers and the co-ops is more helpful. And Peter, I think your points on the E&S is fantastic. But I guess, do you have any other tips, strategies that you guys kind of employ to try to get through to carriers when you might be having an issue? I'll start with Jay, if you don't mind, or if you have, or anybody can jump in. Really.
Yeah, I mean, I saw Tom's comment, and by the way, Tom, it's great to see you. I haven't seen you in a long time, so I'm glad to see you on the group. Yeah, I think Tom's got a good point that I do find that my E&S and wholesale partners are more accessible. Do call me back, and I use the word call there because sometimes I do like to call instead of just sending an email. And I do find that they are more responsive, and they jump on something a lot faster than the standard market carrier does. Now, that's not to say the standard market doesn't get there eventually, but it does feel like a lot of the standard market issues are submit on portal. If it doesn't pass through, it has to be referred, more for small business, but it has to be referred. So you got to wait for where in line is the referral. I think there's a lot of issues here where you could also argue that the standard market carriers are probably overwhelmed by the number of submissions that they get. I would say the best thing you can do on both the wholesale and direct appointed carriers relationships are get to know the people you work with. Don't have 1,500 people that you're going to go through and, I'm going to give a little piece here and a little piece there. Yes, there will always be specialty carriers and specialty programs and MGAs. And that's not what I'm talking about. If you've got standard property, you don't have to go to 16 wholesalers and keep all of them happy and 16 carriers. Pick the people you're comfortable with. Pick the people who know you and get to know you and know your book. That's probably the biggest, I would say, mystery that's out there is how do I get my submissions to be seen quicker than other people? Well, if you're considered a valuable partner and you're giving good business, and it doesn't have to always be loss free. Look, especially in the E&S market space, they're well aware losses are going to happen. That's one of the reasons why you're going E&S, right? But if you put together submissions that really explain the risk, explain what they've done to mitigate any past losses, that's our job, is to really paint a picture. And I find that the better we do when it comes to the transacting of the insurance, the more likely the wholesaler or carrier will be to work with us. So I would say it is definitely worth the time to invest to get to know the people you're working with on the wholesaler and the underwriter side, because they don't come to your office anymore. It's not like it was 25 years ago where you're having lunches with everybody and really get to know them. So 100% take the time to get to know the individuals you're working with and pick the few that you find you have that spark groups. That's one that you have a spark with that seems to work.
Well done, Jay. Good work sparking there. I like that.
Brad.
Yeah.
Brad. Jason, good to see you again too. There's also another thing that's coming up. There's a lot of anger with clients today in regards to insurance pricing and demands. The market has got incredibly tight. I operate mostly on the commercial side, and I've had conversations where people actually think the insurance industry is price gouging now. There was an understanding, say about a year, 15 months ago, when inflation was over 9%, that the insurance industry had budgeted reserves for losses based on a low interest rate. So I can understand where they needed to recoup some of the extra costs that inflation caused in claims. But come on, it's like what? Inflation's now what? Just under 3%? They must have collected those losses by now. someone needs to step, PIA is my thought, to speak to the carriers about their thinking on bringing rates back down to the buzzword, affordability. Everybody's talking about affordability. Insurance is part of that. So that's my 2 cents experience on the street.
Thanks, Tom. Yeah, and we'll definitely get into some of the affordability issues a little later in the discussion. But for this group, I'd be curious to get your thoughts because absolutely, you know, in the past couple of years, we've seen availability decrease, right, and prices increase, which is a tough kind of combination. And I'm curious, and we kind of alluded to it a little bit earlier, like if we're seeing that start to change, if we're going to see some stabilization of rates. Now, are rates going to go down? Probably not, right? I don't know if anything ever goes down, but are we going to see some flattening out, so to speak? And are we seeing, Jay used the term, the softening of the market, right? We're seeing a little bit more willingness to take some risks on. So to Tom's point, are we seeing, do you think that'll change naturally? Is the market or kind of the pendulum swinging?
I would say yes. Initially, I would say yes. You could possibly expect that. I think the issue is going to be, all right, what lessons did the carriers learn over the last 5 years that is going to push them where they can get rates? So one of the things we're seeing is the trending, at least I'm seeing it, seems to be happening with my with other agents I've spoken to, is okay, they know they're still very underinsured on the property side, right? So property rate may be coming down, but they're going to drive rate increase by continuing to hammer at insured value. You're going to start, and I don't think they're going to let that. I like to think that, but you know, sometimes carriers forget. You know, their memories can be short when profit gets in the way. But I think you're going to see them using the property value increase, and I think it behooves us as agents to be on top of that, but also be aware that is an issue. We have to make sure our insureds have good value that they're insured for. So you have to watch what's happening on that basis. I think property. I don't know that. I think we're a couple of years away from rate decreases. I don't know, other than like workers' comp, which seems to they've kind of defaulted to, all right, everybody wants workers' comp that writes work comp, no matter how far those rates continue to plummet and go down. I very much remember just before all this happened, workers' comp was an anathema to the carriers, and they didn't want anything to do with it. But now they're like, well, it's the only risk we have that really isn't weather dependent, so let's just go after that. Well, you know, we don't have to really necessarily worry about that. That's going to be the other driving factor, is weather and how that happens. And they don't want to get caught flat-footed with that as far as rating. The casualty side, that's all. I think that's the product of the state. I think it's part of the governor's address, you know, trying to address affordability and fraud and liability cases. Unfortunately, I wish she could go a little farther and say we need some more tort reform. I didn't really see a lot of that in her speech per se. That needs to be maybe brought up as a possible issue to save that, because the jury awards are getting ridiculous. And so I don't know that liability casualty is going to see much in that coming up, but maybe a stabilization, certainly not really a rate decrease.
Yeah, we have judicial inflation.
Yeah.
And so jury awards, people want a jury in Erie County, that's for sure. But that's a big thing. The property, based on our marketing director, you've seen over the past 5 years, ITV has gotten to a manageable level, and we might see some stabilization. But that would be a decrease in the amount of increase.
Right.
Right. You're always good with a turn of phrase, man. I love it.
Absolutely. The Fredisms are awesome.
Yeah.
And I think other things too is, look, I think it was interesting. You know, when the governor gave her state of the state, and I think all of us pay attention to the auto insurance piece, you know, because he directly talked about combating the fraud and the definition of a serious medical injury. She had one little piece about the homeowners, and she talked about carrier profits in there and transparency with the profits, right? So I don't shoot me for saying this. I do maintain relationships with trial lawyers. So we did exchange each of our official responses to the state of the state, and the Trial Lawyers Association they're hammering the idea that this might bring down insurance costs, but unless the carriers reinvest it, they're just going to pocket the profits. And my response to that was, well, the carrier associations are pushing for a lot of these reforms too. So there's a lot of eyes on them, including DFS, in order for, to see where this goes. So I don't think this is going to be like it was previous times where the carriers have been able to get legislation in their favor and not pass it on back to the consumer. I also think one of the interesting things, and we've talked about this and how to try to resolve it, is that, the carriers that have to file rates, auto and homeowners, they're so far behind at DFS approving the rate structure that it's simply, one of the reasons the carriers, I think, are doing the ITV, the unfiled rate increase, is they can't get the rates they want. And, look, we're in the industry. So, of course, everyone's going to go, oh, sure, they're going to want to file higher rates and higher rates and higher rates. And when you try to explain it, like, it's not just filing higher rates, it's also filing more aggressive rates for the business that they simply want, more of. So, yeah, you might have some higher rates on substandard or where you have to apply loss factors. But the DFS, I mean, and again, this is coming from an old PIA friend who's now at Geico. He said if you go to file an auto rate at DFS today, it could be 2 years before it gets approved. And that's if nothing goes wrong in the process. And DFS has begged for help to get more actuaries, because it really does come down to the actuaries in their system. And, they're getting stonewalled because the people they want to bring in, these consultants they want to bring in to help, aren't union. And hopefully there's a bill in front now that we're hoping we can push, because I do think one of the things that will help bring about rate changes is that the DFS is able to sort of catch up with how far behind they are. I mean, first of all, the rates that have been filed over the last 2 years to begin with.
So you guys both, I've mentioned the state of the state. So that's something that's obviously the regulatory and legislative stuff is kind of near and dear to my heart. So if you guys are all right, I'd love to kind of talk about a little bit, we're going a little out of order here, but the state of the state and what the governor said and what that might mean for the industry as a whole. Kind of get your thoughts on it. So just quickly for the audience, in case you might have missed it, Governor Kathy Hochul gave her State of the State address on Tuesday. And for the first time that I can remember, P&C insurance was not only mentioned, but was mentioned pretty prominently, particularly auto insurance and home insurance. And the name of the game is affordability. The governor mentioned a couple proposals aimed at increasing affordability. And I will say from an, I guess, insider's perspective, I thought it was a little bit more industry friendly than I would have, might have expected. The governor really focused on cracking down on fraud, both in terms of big kind of fraud rings who are staging auto accidents, but also a kind of more, I guess, micro in terms of strengthening what the serious injury threshold is, limiting payouts, caps on non-economic damages for individuals who might be committing a crime, driving under influence, fleeing from a crime, that sort of thing. As well as those who are primarily or mostly at fault in an accident, limiting their ability to collect non-economic damages. So be curious with this group, if anything stood out from the governor's address, and along the same line, what do you think was missing? What would you have liked to hear from the governor that maybe you didn't? I'll start with, I don't know, Jay, you want to take that one? Burden of being president.
Yeah, I mean, look, it's a very weird year for New York, and I'm going to try to get political without betraying my own personal politics here. There's a lot going on in the state right now. Addressing insurance affordability obviously was something she couldn't avoid, because it's become such a hot button issue amongst civic organizations, not even just with insurance organizations, but regular individuals and businesses, a lot in the minority communities, especially in the downstate, Bronx and Brooklyn areas, where they do seem to face some of the highest premiums in the country. So we've put forth over the years a number of ideas or a number of bills we've wanted to see passed, trying to address the concerns of insurance costs. As I mentioned before, I said the word trial lawyers. Look, we know who our diametrically opposed and philosophically opposed forces are, and frankly, they tend to be better funded than we are. They tend to have better access to the party that tends to be in power in the state. So things do tend to be a little challenging sometimes when we try to pass these rules that we all know are consumer protection bills, but don't necessarily limit the awards that a jury can give. So I was glad to see her address the issue of insurance fraud. Could she have gone farther? Absolutely. We if you take a look at Florida, for example, which is always an example of a state that we should keep an eye on in terms of what goes right and what goes wrong. Florida enacted some very serious auto changes, some serious tort reform in Florida, to the point where there were carriers sending their policyholders money back because with the limit on awards and the redefining of no fault in Florida allowed the carriers to basically reassess and reproject out claims. And they realized they had collected more premium than was necessary. So when she talks about fighting fraud, it really is good to hear. Again, then, of course, when she mentioned the homeowners and talked about carrier profits and the fact that that's another senator's sort of banging on his war drum about the idea that the insurance companies are making record profits. I don't know if it was in upstate New York, but downstate on on CBS News, they did a feature talking about insurance company profits, and some of the figures they used were clearly cherry picked, right? That's the first thing you learn in stats class, that stats can be used to justify whatever you want them to be. So I'm sorry she didn't go farther in there. Again, I heard it before. She's not addressing the 800-pound elephant in the room when it comes to other tort reform. The idea of 240, 241 at least being changed to be contributory negligence instead of strict liability and an absolute tort. So listen, the fact that insurance made the state of the state is pretty nice. Those of you who may not know, a lot of the leaders on the left are going to be primaried this election year, and that potentially poses a very, very large threat to what can happen to the insurance leadership in the legislature, the assembly, and the Senate. Look, the one nice thing we didn't hear coming out of the insurance committee was people weren't using the phrase price controls and price caps, which, as I'm sure you can imagine, the carriers will have nothing to do with, and they will exit the market space immediately. But my concern is, if you do see some of these farther left people getting positions of authority, you may start hearing those kind of suggestions. So just to dovetail back, I was glad she brought up insurance and the idea of affordability. I hope she sticks to what she's been talking about. When they passed the third-party litigation funding bill, some of the teeth came out of it, but the chapter amendments should put some of the teeth back in, I hope. This is going to be an ongoing battle. So the fact that it's now out in front of the public to see, I think, is good, because I think the consumer needs to hear more about what happens in the insurance process to understand that it's great for the lawyers to say injured New Yorkers deserve what they're entitled to, except it's coming at the expense of the small business owner and even basically the insurance buying public at some of these nuclear verdicts.
I think to add on to that, just to tell you that I think in a little bit based on this group, probably it's preaching to the choir. I think we all understand that to some extent. I think they're finally seeing that. I think that's the glimmer of hope we have, is they finally are recognizing, you can wave the spotlight on that. Oh, that's the bad insurance company and yada, yada, yada. But I think people have figured out, oh, no, that has now trickled down. That's why our insurance rates are skyrocketing, are these awards. And we've learned legislatively in PIA, with the successes that this organization has been able to have, a lot of the efforts to get legislative issues passed are marathons. It's always a marathon, not a sprint. And it may take multiple years, and you chip away at that. Lawsuit reform is good. It's not great. There's more work to be done on that basis as far as the jury award. We got something. Now they hope maybe the chapter amendments a little bit more of the teeth back in. And maybe next time we can go back with another bill, or another bill can be with the coalition can go through to even do more on that basis. There seems to be, a tenor now to maybe look at that basis as like, okay, that we need some reform, and maybe we can get the words tort reform out of somebody's mouth politically coming up here. I see maybe that possibility. Maybe I'm being overly optimistic about it. Who knows? But I think that they're starting to understand, and that is an issue that has to be dealt with.
Look, you got to
Well,
realize
May,
this.
May, so go ahead, Fred.
No, go ahead, Tom. You're the
I
guest.
just wanted to say it's interesting. We got into this conversation about the affordability and Governor Hochul's state of the state. This morning, I wrote her an email, and I put in some of her comments about affordability, and I brought up. I said, if you want to truly make certain things affordable, as far as insurance goes, you need to address labor laws 240, 241A, as they add costs to construction, which eventually gets filtered down to consumers in some fashion. The new, I'll call it the Cuomo Bridge officially. I read something several years ago when the construction was happening that millions of dollars could have been saved on insuring that project had there not been, absolute liability when it comes to labor laws. So, even the cost of building a new house adds costs, and who pays that? The buyer. So, I think if each and every one of us does that, writes to the governor, she'll be overwhelmed and take notice. In fact, Tip O'Neill, revered Speaker of the House of eons ago, once said that for every letter he got on a subject, there were 10 other people who felt the same way. So you figure if you get 1,000 letters or emails, that's a lot of people who are swaying her thinking. That's simple as that.
Like that, we got a Tip O'Neill reference here. That's great, Tom. Thank you very much. On scaffold, I'll just mention just quickly one of the initiatives that PIA has been pursuing, because it has been, it's almost a Sisyphean task on the state level to try to get any sort of labor law change. There is a little initiative on the federal level, though, to basically exclude any construction project that gets federal funding from strict liability from labor law. That is something that PIA is strongly in support of. So if any of you are interested in participating in our campaign to try to get that through, please reach out. We are setting up meetings with federal legislators to, I guess, explain to them what the issue is and how this legislation can help. So I think there's a real opportunity to try to get some federal momentum behind that, which would be great because, as I mentioned, on the state level, it is tough. So with that, let me turn it back to our panelists in terms of anything in the state that you might want to mention.
Yeah, but that bill is Nick Langworthy's bill.
It's Nick Langworthy. Yep. Thank you very much.
He's all behind it. These are federally funded projects. And my guess is if that bill goes through, it's going to be attached to something else that a lot more people want. This is not going to be a clean bill.
No, you're exactly right. So I think that without getting too nerdy, but I can't avoid it there. I think the plan is to attach it to a transportation rider. So it's a bill that has to get passed through to fund the transportation department. So it would be included in there, which would be something that would be nice in terms of a more easy win, if you will. I guess question for the group here, and actually a question for the audience. I'd love to have your comments, comment section here. If you guys were the DFS superintendent for the day, what is one change that you would make to the industry? I'm going to start with Jamie this time. We'll give Jay a break.
Sorry, I'm not going to make a comment. Okay. So I think if I was at the DFS today, I would do something to open up and streamline and create better efficiency in the filings the carriers try to get in. I think the problem is we are as a state dramatically behind the rest of the country as far as updated form coverage, which benefits the consumer in a lot of ways and the insured, also in rate. The issue is that, as Fred even alluded to earlier, mentioned earlier, didn't allude, he out said it. The rate the carriers don't have the ability to have real time rating in their system and to adapt. And because of that, they're falling behind. They can't catch up quick enough with the rates. It causes a longer tail. Their inability to file rates efficiently creates a problem. And I think the department needs to do much more as far as assisting the carriers in getting their form and rate filing through. As that is, it's the overregulation and the delay is just too long.
Yeah, they need to hire and train enough staff to address this. And the old saying, there's no such thing as a bad risk, just a bad rate. Well, that's the carriers are dealing with bad rates because they're too old. So
yeah. Peter, Jay?
Peter, I was going to say staffing levels at the DFS, to follow up on Jamie's point. I mean, that is just slows everything down, even in our world in the wholesale space. With again being non-admitted, we still utilize them, and the carriers and the programs get bogged down.
And all due respect to Peter's group, I think the DFS should be paying attention to how much business is going through and they're on this thing. I want a strong, solid excess and surplus lines market in New York State. We benefit from that, but there's a lot of risks in there that really, all due respect, should not be in that market space. They should be in the traditional carrier markets. They should have the rates and the forms and the ability to write these risks and take on that exposure. But I think the carriers have leaned. Even the traditional carriers all have their E&S, they all have growth goals on those markets. They know they have flexibility there. They're leaning into that because that's how it operates in New York. They know that's where they can be successful. And that's unfortunate. That's at the expense of the consumer and at the expense of the insured public in New York State.
Yeah, you see standard carriers with E&S subsidiaries, and they're renewing some policies in these subsidiaries. So
right.
So with Jamie's permission, I'll give my answer.
I yield to the gentleman from Long Island.
Thank you. One of the biggest concerns I see with the DFS is the fact that the last few supervisors and some of the more senior staff have deemed it their role to oversee more of the banking community than the insurance community. And I'm not going to argue old forms of why it was combined, whatever it may be. It is what it is, and I think that when Supervisor Harris left, and they listed amongst her accomplishments the regulation of crypto and everything else that really is not our concern. It's a little much for me to really think that the Department of Government that's overseeing our entire industry, that we're not quite the redheaded stepchild, but we definitely are the secondary, less important child of the two. And that's that. So if I had my one day, I would try to make sure that allocations are equal when it comes to banking and insurance, because I do think that would help with a lot of the problems that we have, that we see with the DFS, is that they don't consider insurance as important an issue as overseeing all of the banking.
I would love to be head of DFS for one day. And the one thing I would tackle would be, Brad, you may know more about this than I do, but it has to do with used car dealers in the state of New York must have insurance from a A-rated and licensed carrier within the state. Now, they do that for some kind of financial stability thing. I'll tell you from my 30 plus years of doing this business that used car dealers first cannot afford, the small guys especially, cannot afford a volunteer market. They mostly depend on the excess market, and it's usually pretty good and stable. However, I have a client now who's been attempting to open up, in fact, actually he's operating without insurance, a used car dealership. And he's done all the regulatory things that need to be done, but we cannot find this guy a company who will do the liability and the, that's needed for that kind of operation. I don't know why that was passed. and correct me if I'm wrong, but that's what we've been told by carriers. And I think I confirmed it with Ask PIA. So that would be an area that I would like to see also fixed.
I appreciate that. This is a kind of a sneaky way for us to help with our legislative priorities. I'm going to take all of these things and put them in the hopper and see what we can do to actually fix them. So we are actually running low on time, which is amazing. I knew this conversation would just fly by. So I kind of want to leave the regulatory just maybe for a minute here and talk about AI, because I don't know that we can avoid a conversation about artificial intelligence in 2026. It is ever present. So I would be curious to get the opinion of this panel and everybody, again, in the audience here, in terms of, have you or are you planning on deploying AI tools in your agency? And I guess if you have, what are you utilizing? And if you haven't, kind of what is preventing you from doing so? Is there something that you're looking for?
Maybe I can help you with
Yeah.
that, some of it. We have a technology committee that's exploring all of the different needs among the departments and the tools available. So we've started with Microsoft Copilot introduction and training, and we're looking, simple things is like emails and letters, but we can go find someone who will do contract reviews, policy comparisons, proposals, policy summaries, claim coverage reviews, RFP responses. But AI is not a finish, it's a start. And you can't rely on it as the answer, but as the way to make getting the answer faster and improve efficiencies. You can't, the difference between delegation and abdication. You are delegating a task, not abdicating your responsibility.
I'm going to steal that line, Fred.
AI is such a fascinating topic because, first of all, if you look at the AI vendors out there, some of them try to scare you into thinking that if you don't have the latest and greatest AI product, that you're going to be a complete failure in business. And I think where you see the AI, it comes from, AI phone systems to answer and route your calls better than a human and cheaper than a human, or be able to and make it sound like it's a person on the line, right? Fred mentioned, policy comparisons, policy reviews, all the things you can do with AI, expediting submissions, right? Reviewing submissions, expediting applications. There's a lot about AI that's out there. And what worries me is that AI still takes the human aspect out of it. I think each of you in your own businesses have had an opportunity to meet with somebody face to face, and they would have looked fantastic on paper. But when you met with them, you figured, like, what, this is not someone I want to work with. And that's a huge glaring gap with AI, that AI does not have human instincts. Might get there, and of course might turn into Skynet and the Terminator. I mean, I don't know where we're headed to, but I think it's something we have to be aware of. It's not going to go away. It's only going to grow. My biggest concern, and this is where I would put the challenge back to everyone here, is that we have to make sure that the AI narrative is controlled by insurance professionals. Every time there's a technological revolution and it's controlled by, they love to use the term industry disruptors, right? Oh, this person went to Harvard. This person went to Princeton. They're going to disrupt the industry. And what they end up doing is causing way more problems than they do helping the way insurance works. So I think we all have to stay engaged and involved and make sure that this doesn't spiral out of control, where there's no need for anybody in an office. All transactions are done through a website or an AI-run phone system. And, look, we can't even determine, and I'm glad Brad mentioned the Metro app panel coming up January 29th, the Sheraton Hotel, that, we don't even know yet on the E&O standards what happens if AI goes wrong, right? We assume it's the agency because that's the one controlling the AI, and maybe you do or don't have recourse against the AI company if it was custom built or whatever it may be. So this is going to be a long, ongoing conversation that I would just stress that we have to be a major, major voice in. Not just let those technologically adept people who want to make a massive profit and scare you into buying something you don't need control the dialogue.
So if you putting it in your organizations, you got to have a usage policy, and we do. We have an acceptable use policy that everybody had to sign off, and it includes pre-clearance, acceptable use, prohibited use of approved AI, employee guidelines, data security monitoring, compliance, ethical use, and reporting of violations. These are the kinds of things you have to have up front before you let the horse out of the barn, folks. It's a tool, not an answer. It's a tool.
Jamie, Peter, anything to add to that?
I think that's absolutely correct. There's good guidance on how you use it. We haven't developed a policy in my office because it's just so new. I'm trying to figure out as a small agency organizer to find that path, and hopefully looking towards resources that the PIA will be able to help support that and provide some guidance on there. But I think it's at this point, there's just so much out there that we don't know. I've of course utilized AI, utilized some Copilot, I've utilized ChatGPT mostly for email and correspondence editing, that sort of basis. I've checked into the National Alliance, Risk and Alliance has their Allibot, which is an insurance related product that we get because of membership in the National Alliance through PIA. But it works. But I think that the policy analysis, I think, could be a really good area that I'm very interested in for AI to help do the comparisons, as long as we could find a solid product. There's a lot of great benefit out there, I think, that could really help. I'm scared of the AI information that my customers are using to make insurance decisions, and how valid the information they're getting, and how they come to us and kind of pre-underwrite themselves with information, thinking they understand their own risk without real guidance on understanding. Because again, AI is like any other information tool, garbage in, garbage out. You're going to get, it depends on how you ask the question. I think the information is pretty good. I kind of test some of the pages too. I'll put like, hey, explain this to me, and I'll see what the information is that it's putting out there. And it's some good information there, but there's also a lot of mistakes because it's just too generic of an answer at this point. But it's only going to get better. And and I agree with you. I think Skynet's around the corner, so are we just going to have that eventually? They're already showing signs of it, and I jokingly say that, but there is some concern about who's putting the handcuffs and the guardrails on these products, and how is that going to happen? I think it's a product that's outstripping our government, which is typical with technology. They cannot be out in front of it fast enough, and then who's allowing what to happen? Very concerning. But that's where we are with AI.
Jamie, it's funny you say that. I have one of my closest friends is a doctor, and a couple of years ago he had said to me, WebMD is the best and the absolute worst thing to ever happen to the medical industry. And at the time, I kind of understood what he was saying, but I was like, what's wrong with consumers having a little bit of knowledge, right? Like trying to figure out and now that somebody can go online and ask an AI what kind of insurance they need, and when they call me asking for a specific form, that I'm like, that's not relevant to you, right? I mean, because they're getting information that's just that it makes. And listen, it's not that. Look, I know how people can listen. Lawyers, insurance people, right? We're terrible. We take their money. We never pay a claim. Of course, when they have a loss, we're the first people they call, right? So, but when it comes to the idea of AI on the consumer side, telling them what they need to know before they talk to us, we're professionals, we're licensed. This is what we do for a living. And it does get a little disconcerting that there's a lot of information out there that, as Jamie said, garbage in, garbage out. And I do just want to close real quick, because I did promise Rich I'd bring this up because he commented on somebody else. One thing that's really important to know that PIA is doing is we have created a Northeast carrier partnership. And that partnership has a number of carriers, and it's not just, local underwriters. These are C-suite level officials in these carriers. And it represents the states of the PIA Northeast, so New York, New Jersey, Connecticut, New Hampshire, and Vermont. A few of us from the state PIA groups are on the committee as well. And it's a real dialogue between the carriers and us as the agent association to find common ground. We're working on a number of initiatives right now. We're working on language that we can use to explain to the consumer about inspections, right? That it may come from drones, may come from pulled public data, may come from somebody pulling in front of your house, but really explain to you what your rights are when it comes to those inspections. We are working on carriers being more transparent, speaking of AI, of how they're going to use AI and what it means for us, as basically their sales force. And we're also talking about ways in which we can work together to create better communication to the insurance buying public. So my throwback to you guys who attended this, if you have any questions, any concerns, anything you'd like to see the carriers work better with the agents on, let us know at PIA, and we will absolutely bring that up to the carrier partnership meeting. We actually have one. I mentioned MetroApp January 29th. We have a carrier partnership meeting that morning. So if you can get your concerns to me or to Brad or anybody else by the 28th, they will be addressed at that next meeting.
Thanks, Jay. Peter, anything to add on that?
No, I'm good.
Cool.
I think we're hitting the time.
Yeah, we're just about
Jason,
time. One thing I
Jason,
mentioned
real
last time I
quick,
mentioned an
just
AI
to-
is PIA has developed a sample AI policy that you could utilize at your agency that should be coming out in the next couple of days. So if you're interested in that, we can absolutely send that to you. So with that, we are getting close to time, and I'll ask our panelists if you got any last closing thoughts, anything that you really wanted to mention that you didn't get a chance in this hour discussion for our group.
Just to close by saying once again, look, this association functions best and works best when the members like you show up to events like this, voice your concerns, voice your feelings. Look, we take our marching orders from you. Okay, everything we've done, every legislative priority, every legislative victory, from the god awful anti-arson repeal, right, to the Carco inspection bill, this all came out of members' voices. So please don't ever feel like an idea you have might not be significant or important. We always need direction, and we can only get it from membership. So please stay engaged, active, and always share your opinion. Well said, Jay. Well said.
I would just like to add for those, appreciate everybody that has participated here. And if we are you. To echo on what Jay said, we are you. We are all agents that are just like you guys. And if you are interested in helping us and helping out on committees or interested in that basis, please reach out to any of us or to Brad directly or to Shirley and express your interest. We are happy to take and add on to the committees. From that, we move on to our own governance. We need new interesting ideas, and we need new talent all the time. So please reach out if you want to participate and help out even further. You just being here is amazing and great, and we thank you for that. And we hope you found some value out of it. And I know that I have, just even being a panelist. So thank you.
Thanks, Jimmy. Fred, Peter, anything closing?
No, thank you for attending. We hope it was worthwhile, and you'll come back for the next one.
Yeah, thank you very much, everybody. Appreciate it. If you got any ideas for future panel discussions, please pass it along. As Jay and Jamie said, we're here for you guys. We are you guys. So really, we take our marching orders from you. We'd love to hear your thoughts and opinions. So thank you very much. Appreciate the time, and I hope to see you guys at the next virtual panel discussion, as well as online in our Spark groups. Thank you very much.